and welcome. My name is Melissa Armo, and I own my own company called the Swoosh. And today I'm going to talk to you about how to trade like a winner. Well, if you want to be a winner in the market, then you have to have a strategy that you use that consistently will win. In other words, if you're someone that is buying the dips of the market and that's your strategy, that only works in a trendy market. It does not work when the market isn't trending up. And so let's go back to, I'm looking at the QQQs. We started out very bullish for 2024. I mean, personally, I was rather shocked. Let's find the first day of the year here. So this is January 2nd, first day for the market for the year for 2024. And we rallied. And if you bought every dip in the market, you didn't make money all year. But a lot of the dip buying did work, particularly in the beginning part of the year and then midsummer, June and July. You can see here where we made new highs, which was July 10th, 503.52. We're a long way off of that right now with the sell-off that we had to start out September. And now all of a sudden you say, wow, could we actually fall all the way down closer to where we started the year? Yeah, we might. So what do I look at? What do I focus on when I'm trading? I'm not buying dips in the market, but I'm pointing this out because a lot of people, that's their strategy. And when the market or stock is trending bullish, that may work for a period of time. It doesn't work consistently, okay? And you also have lots of wiggles and jiggles along the way. So in order to trade as a winner and make money consistently over the long haul, you have to have a strategy that works under any market conditions. Whether the market's bullish, whether the market's bearish, or even whether the specific stock you're trading is bullish or bearish. Like sometimes I will short a stock that's in an uptrend. And sometimes I will go long a stock in a downtrend. Okay, so again, what do? I trade stocks that are gapping. I trade the actual gap. So let's take a look here. I'm just going to blow this up and go back to July. Let's go back to here, July 17th. So there was a bearish gap on July 17th. Now, what is a gap? For those of you that don't know what a gap is the difference between the close and the open. So the stock market closed at one price at 4 o'clock here and opened at a different price the next day. So this open is 9:30. That's a short period of time for that amount of trading action to occur because the market has a post-market and a pre-market. That's true, but it also has a close period. The market in the U.S. stock market is not 24 hours. So the gap happens overnight or in the morning, okay? So in this case here, we closed at 496.34 and we opened at 488.28. If you looked at this gap in the market and shorted it, which we did, you could have made money, okay? This has a nice dragon on here. You see this sell-off happen. It was about, $6 plus. You also could have bought puts in the market here too. Now at that time, again, the market was right off the highs. So again, you can short in a bullish market. The problem is the people that are looking at trends and trend trading or buying dips, again, traders prefer to go long, is that only works, like I said, if something is power trending up or power trending down if you're shorting, or again, if it is in a strong trend that's going, it will temporarily work some of the time, but not all of the time. And that's what happened where a lot of people were buying in July and then even into late July and then in August. And now here we are in September. Again, we're about 58 days away from the election. So I think it's going to be a very volatile time to trade, actually. So my point is that if you want to trade like a winner, you need a strategy that you can use every single solitary day doing the same thing, a different ticker symbol every day, but same strategy. looking for that exact same blueprint that you're trying to find in any market conditions. And again, in any trend, whether it's up or down. Because again, buying support and buying dips does not work consistently as a strategy. It did work different periods. I'm going to go back here. It did work at different times since the beginning of 2024 when the market was rallying up. And it didn't work other times. In fact, by the end of the year, we still have good 4 months left in the year. But by the end of the year, you may go back and look and say, woo, it actually, buying the dips or buying support worked less than it didn't. For example, again, I'm just bringing it up here because we started out the year at 405.84. That's where we opened for the year, January 2nd. So we're like 43 points off that from the close on Friday. We could be down tonight. Futures open in 6 minutes. It's a Sunday. But it wouldn't be insane to think that there's a possibility that the market could actually close negative on the year with 4 months left. And again, going into an election cycle and high expectations, very high expectations that the Fed will lower rates. I heard somebody today say that it's 3/4 of a point is guaranteed and they're talking about 1.5. I don't agree with any of that actually. So the market really is expecting significant rate cuts between now and the end of the year. I don't think it's going to play out that way. And the market has already built in rate cuts that never happened, which was part of the reason we had the rally we did in the summer and even the beginning of the year. Remember back a year ago, if you've been trading at the end of 2023, everyone swore up and down they would be lowering rates 5 times in 2024. They have not lowered rates even once yet this year, and we are running more than 8 months into 2024. So, again, looking at the economic data, looking at what commentators say on TV, even though I do appear on TV and I give my opinion, that's not the best way to make trading decisions. You have to look at the price action. And for me, I look at the price action in the gap. So looking at the gap, I determine if I want to go long or if I want to short, okay? And again, you could look at something and say, well, this isn't an uptrend. Why are you shorting this? Because I can see that it's going to sell off. So when I'm looking for the gap, I'm looking to trade with institutional money. Actually, let's go look at another one here. Let's look at Boeing. This was another one that we were in actually before we were in puts, before it crashed last week. So again, let's go back. Stock closed here. This is Boeing at 173.74. Open in the morning here at 167.03. We were already in the 170 puts, and then it opened $3 in the money on this particular day and fell and crashed and broke 160. That was a nice trade. We were in it already prior to this sell-off, okay? So again, we actually did it here. So I called it here, took a couple days to go, and then poof. So if you're someone, again, that wants to win in the market and make money on a consistent basis, you have to have a consistent strategy. I know most retail traders like to go long. If the market continues to whipsaw and even sell off down closer to where we opened for this year, going long every dip is not going to work, and people are going to get crushed. They will give back all the gains that they had in the first part of 2024. People will give back the gains that they had in 8 months in the year, in 4 months of the year, if we sell off. That's how it works. One of the reasons I prefer to short is that moves to the downside happen much faster than moves to the upside. Why? Because panic comes in. Again, one of the criteria that I have when I'm looking to trade is I'm looking to trade on the side of institutional money because they take hold of a stock and it's panic. The panic comes in and that creates the selling. And then you have shorts, okay? So I'm always looking for that, hunting for it, trying to find it. each and every day. And for the most part, I do get that. So how do I determine if a stock is going to fall? I rate it using a 26-point rating system, and that's something that I teach. I teach my trading method. And again, many people trade the market without any method at all. They may say, well, I am going long on a moving average, or I'm buying on this intersection of this moving average or Fibonacci, or because it's power trending. But everything I just said is not a strategy. Here's another one we did. Snow. So I was talking about institutional money. This is a great example of this. Why? High of the day for the snow was almost 124. Low in the day was 115. This was earnings. Okay, Snow had earnings. This was 822. This is a huge move, even for a stock like this that can have a big move. But this is a really big bar. This is one of the biggest bars from the chart. It's almost $10. And that's a great example of institutional money. How would you have traded that? Shorted it as a day trade on margin, which we did, or bought puts, which we did too. Actually, you could still be in this. You could be in a swing trade in this too, or you could still be in puts in this. I'm not, but you could. So again, many people are looking at it and they're saying, oh, I'm going to buy this. But again, what happened? It fell. So you could read, remember we're talking about making decisions based on price. You could read the earnings report on Snow. Again, Snow was earnings. You could say, well, it said this is going to be good and this is going to happen and everything looks great and everything's, and then the stock sells off $10. Now, I don't know what the Snow earnings said. I don't pay attention to that. I would never have time to trade if I had to look at all of that. But I'm saying, even if you did, even if you took the time, got up at 4 o'clock in the morning, read through everything, looked at the nighttime earnings, I'm telling you, it wouldn't always match up to what you think anyways. Again, let me go back to the market quickly. You can have good data and the market sell off. You can have bad data and the market rally. So what you think it's going to match up to be, if you're trying to follow earnings reports or economic data, is not always what you think. And again, the economic data has really been a problem this year in 2024, unlike any time I've ever seen before, where there's constant revisions and a lot. Like, not only are there a lot of revisions, and the revisions are a lot, so a big difference. And when the Fed is making decisions about whether or not to cut rates based on data that's inaccurate, it makes it very difficult for people to make trading decisions based on that. So just don't. If you're an active trader, if you're an active day trader, if you're actively trading options like doing the weeklies, which is what we're doing, you can make money very quickly by just getting in and out of trades, and I call it chunking it out. But look at what's happening on the live day. Look at what's happening right now today. Don't worry and say, oh my gosh, this isn't an uptrend. I can't possibly short this. Why? You could miss a huge opportunity to make money to the downside by not wanting to short something that's in an uptrend. Again, what is happening? I'm just going to pick a day here. Well, let's talk about Friday. What happened on Friday, at the unemployment number out Friday, the high was 461.22 and the low was 448. This was a small gap down, but technically it was a gap down. We closed the night before here at 461.04 and it opened the next day at 460.33. So technically that was a gap down on Friday. But anyways, you're missing out on a huge opportunity if you don't know how to short, because you could have made a lot of money shorting this, buying puts, or just shorted the market as on margin, because the market fell $12 plus. So again, that is a big sell-off even for the QQQs. So if you're like, oh my gosh, the market is so strong and I need to buy the dip because it's going to go back up to the highs, and we're into support, and we're going to have a rate cut soon in September. If these are all the things you're thinking, that's not a set strategy. And again, this is my whole point of today's talk. You must have a strategy to trade and win consistently. Buying support is not a strategy. It doesn't work under any market environment. It doesn't work under any market conditions. It doesn't even work in something, even if the stock or the trend is in an uptrend. And again, this market, I'm just going to go back even till, let's go back. Yeah, let's go back to 2021. like 2021 was very bullish, and that was just ridiculous, to be honest with you. But it was the COVID, it was the post-COVID and everything, and then we ran up. And it lasted till pretty much November. And we had very few sell-offs in the year of 2021. We really just had a very bullish year in 2021. 2022 was not so much. You had different periods where we sold off, different periods when we rallied wasn't the same. Again, 2023 was pretty bullish for the market too. This is the end of the year 2023, getting up in here. And then 2024, as you well know, has been extremely bullish. We've made multiple new highs. And again, all based off of data and the expectation the Fed is going to lower rates. But the economy so far is strong. So why would the Fed lower rates when the economy is so strong? I think the Fed is going to wait too long to lower rates, in my opinion, is probably what's going to happen. Like, I'd be shocked if there's more than a 0.25% rate cut in September, maybe a half. It's not going to be 1 or 1.5 or anything that any of these people are saying. So, and again, even if it is, the market could sell off. Why? Because then the market could sell off because the Fed is worried that we could go into a recession because the unemployment number was higher than expected. So if you're looking at all those things to make decisions, you're just going to box yourself in. You have to find something to do that you can look at this, stand back, look at the price action and make a determination that isn't an opinion-based thing. So when I look at, the gap, I go through my 26 points and I rate the gap. If the gap rates 20 points or more, then I'm shorting it. Whether the Fed lowers rates or not, whether the earnings are good or bad, whether any of the commentators on TV see anything. And again, this is accused, but it could be anything. It could be Snow, could be Boeing, could be Foot Locker, could be anything that I've ever done. Again, the point of what I do is to play the gap. And I don't short every bearish gap, and I don't go long every bullish gap, and I don't short every bullish gap, and I don't go long every bearish gap. I use a rating system to determine the direction based on the points. It's a sliding scale. If it's under 20 points, then I'm not going to do it at all. And I'm not going to flip it, but I'm not going to do it at all. So I feel that, again, I have high odds that the trade is going to work in my favor if it rates over 20 points, and that I'm going to get what I'm looking for, which is a big sell-off. And I'm just talking about shorts here right now because I prefer to short. But that I'm going to get institutional money shorting if in fact it rates good. There was another one we did. Again, this was July, feels like a long time ago now, but closed at 480.62, opened at 473.82, sold off like a hotcake. Another $10 plus bar. There's some big red bars going on in the market. July, August, September. So, you need a strategy to trade. It's not buying dips and it's not buying support. You can't even do that all the time for consistent wins and good results in a trendy market, in a bullish market, or even in something that's in an uptrend. And again, think about what I said, getting up closer to the election. I mean, when you look at this, you say, sure, we can make new highs. We could, we might. And then maybe I'll go long the market. But again, I'll be rating the gaps in the market to determine if I want to go long. I'll be rating the gaps in the market to determine if I want to short. I'm not looking at the fundamentals of stocks. I'm not looking at the economic data, because if you're looking at those things, you're going to get it wrong. You need a strategy that you can apply. I want to say that it's like a non-biased, but it really, you have to be non-biased basically. So I developed the 26-point system that I use and teach in my monthly class so that it helps me stay not biased. Then I can just say, if I get this total, I'm doing it, regardless of whatever the earnings say. And that's really, really the only way to be. And again, you can do and utilize my system in any market conditions, bullish or bearish. But the fact that I prefer to short, I do think bodes well if in fact we are going to have a lot of volatility and some significant sell-off days here between now and the end of the year, or even running up into the election. Because again, most traders don't know how to short. It's something that I specialize in. It's something that I prefer to do. I will always go to the short side first. If I don't find a good short, then I'll go long. But I really do prefer to short, and I found that it's given me a niche as a trader. So if you'd like more information, and if you'd like to learn more about my strategy, or upcoming classes to sign up, email me at melissa@swoosh.com. Have a great day.